All right, welcome back to Stock Tricks with Nick for this week's Breakout Watchlist from June 6th to June 10th. In this video, we'll be covering the top setups going into next week. Each of these stocks have strong fundamentals, strong technicals, or volume patterns that lead to stronger uptrends. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. This week, I've broken down the setups into 3 different groups, kind of an other category that we'll go through first, then oil and gas, and then high volume closes or HVC setups. Like always, we can't spend too much time on this slide because we've got a lot of charts to go through. The first stock that we'll start with is ACHC. This was actually on the breakout watch list last week, but has just pulled back to the 50-day moving average and has tightened up. Really strong fundamentals. Last quarter, we had earnings per share up 43%, sales up 12%, after-tax profit margins up 11%. This has a A- group strength rating. It's in medical output healthcare, 33rd strongest group right now out of 197. So A- group strength, C+ accumulation distribution. Ideally, that's a little bit higher, but it has an overall composite rating of 90 along with an individual relative strength rating of 91. That relative strength rating is really what I look at because that's based on price, and we only make money when the price of our stocks go up. Within the group of 17 stocks, this is number 1 on relative strength and number 1 on overall composite basis. Taking a look at the fund ownership, that had been steadily increasing up until September of 2021. And then like many other stocks, we saw a decline from 590 to 576 to 558. But we have seen some high volume days, most recently in April and May on the upside. So we'll see when June numbers come out at the end of June if that increases as well. On a technical perspective, we had a nice move from $50 up to 76, around 50% increase. From there, we've pulled back to the 50-day moving average, undercut it for a few days, but you can see we're really starting to tightening up as the 50-day moving average catches up to this round $70 number. That's where I want to be managing my risk against if I get into if I enter the stock. I want to keep my stop under Friday's low, under the 50-day moving average, but still within 3% to 5% of my entry point. So looking for a break over Friday's high, 71.92 as a potential entry point for ACHC. Next, we have CELH. This is a stock that I've been monitoring for a couple weeks now. It's in beverages, non-alcoholic, so 48th strongest group out of 197. A- group strength rating, B+ accumulation distribution, a little bit stronger than ACHC. Got a 93 overall composite rating, along with an 87 individual relative strength rating. Fundamentals have been very strong continuously for this stock, but most recent quarter, year over year, has increased earnings per share by 800%, sales by 167, and after-tax profit margin improving by about 1%. Taking a look within the group of 20 stocks, this is number 6 on relative strength and number 2 overall composite basis. Fund ownership on this was sitting steady at 405, 406, declined a little bit in March to 390, but in May, we had this nice 800% earnings per share growth. We popped off the low from 36 up to the 50-day moving average on massive volume, 4.4 million shares. You can see that's well above the 50-day moving average of volume. So a ton of volume getting into the stock as it gets accumulated, breaking over the 8, the 21, and the 50-day moving averages, kind of forming this pivot at $60. We broke through that 2 weeks ago, challenged the 200-day moving average last week. We closed above that on Friday. And then what I really like about the stock is in the shortened week that we had last week, very low volume. You can see volume drying up well under the 50-day moving average while we respect the rising 8-day EMA and just building under this 200-day moving average. So for this, looking for a break over Friday's high, $69, with a stop under the 8-day EMA there. The next 2 stocks that we're going to be covering is ENPH and JKS, both of which are in the solar, energy solar theme, which you see 122 out of 197. That doesn't scream relative strength, but more recently, the last 3 trading weeks, we have seen relative strength within this group, with ENPH breaking over the 200-day moving average, pushing up to test $200, and then on Friday, very poor action in the market. This pulled in, and you can see the low of the day was 190.20, so that 190 area got respected. Buyers stepped in and supported the stock there. If we're going to see more continuation to the downside in the market next week, if we could pull back into the 8-day EMA, the 50, the 200-day around 177, a pullback like that we would want to allow to tighten up a little bit more. But pulling into this 190 area is where I would want to start a position and then keep my risk at Thursday's low, 187, a little bit wider of a stop loss there, so I'm going to be taking smaller size. That's ENPH. The next solar stock that we're covering is JKS. This has an accumulation distribution of A-, 92 overall composite rating with a 96 individual relative strength rating. And you can see the blue dot here that indicates relative strength line hit a new high, and it did so well before price, which is a good thing to see. Similar to ENPH, this had popped over all the key moving averages a little bit earlier than ENPH. But this has been a very tough stock to trade individually. Very wicky. You can see pretty wide daily ranges, but more recently we've broken over the $60 range and then consolidated over that area over the 8-day EMA. What I really want to point out on this chart is actually if we go to a weekly chart, how it mirrors the previous base before the breakout. So you can see 2017, September of 2017, we put in a high, and then for months and months and months up until 2020, we base out. And you can see this base compared to this base, very similar looking, putting in a higher low, putting in a higher low here, and then a shakeout, and really consolidating. And then we get this one candle where we break over this pivot, but not noticeably higher. And then we trend for 1, 2, 3, 4, 4.5 weeks. Very strong. If you remember JKS, it basically went up in a straight line for 4.5 weeks before consolidating and then eventually dropping down and putting in this new base. So we have the initial low, higher low, shakeout, and look what we did last week. We broke over that initial pivot, but didn't put in too much of movement there. We were up 5.4%. So let's see if we could break over that high and then really get trending for 3 to 4 weeks where we can capture a lot of gain there. So going back to the daily chart to see our entry point, we want to manage our risk against 60 and the 8-day EMA. So if we can break over Friday's high, 63.37, that's a potential entry point. Next, we have LRN. This is in consumer service education, 66th strongest group out of 197. It's got a 98 earnings per share rating, which is pretty notable there. C+ accumulation distribution on the lower end, 94 overall composite rating with a 95 individual relative strength rating. Fundamentals the last quarter, earnings were up 79%, sales up 8%, after-tax profit margins up 10%. Within the group of 45 stocks, it's number 1 on earnings per share, number 3 on relative strength, and number 3 on overall composite basis. One of the few stocks looking at fund ownership that didn't see a fund ownership decline in the last 2 quarters. We went from 322 to 333 to 365. So big money coming into the stock. You can see technically this is a really nice pattern going from 25 to 41. And then these last 2 months or so, we pull in, put in a lower low, shaking out the weaker hands, finding support at our nice round number of 35.04, buyer stepped in. We break back up to 40, and now we've been building a pivot right under $40. So a break into 40 would be our entry point. Similar to JKS, I want to look at a weekly chart and see that this does have the ability to trend higher for a very short amount of time, but very powerful move. Last time it did so from 25 up to $50, so about 100% gain. And this does have about 10% of short interest there. So looking for a break over 40 for LRN. Outside of the oil and gas themes, solar and semi have been the themes to focus on, and ON Semiconductors is one of the strongest in the groups outside of PLAB, which is extended in the short term. So ON Semiconductors, right now, relatively weak group, 126 out of 197, but again, more recently it's been showing relative strength. It's got a 92 earnings per share rating, B accumulation distribution, 96 overall composite with a 94 individual relative strength with that blue dot relative strength new high, always a good thing to focus on. Fundamentally, extremely strong. Earnings per share have been over 200% growth year over year for the last 4 quarters. Sales around 30% growth, and after-tax profit margins up 16.5 the most recent quarter. Within the group of 30 stocks, this is number 2 on relative strength and number 1 overall composite basis. Fund ownership also has been increasing on this steadily, even the last 2 quarters, which, like we pointed out, hasn't been a common sight to see. So that's very strong. On Thursday, now switching over to the chart, on Thursday, really nice move on heavier than average volume through that $60 area. And then on Friday, we pull into 60, but the low of the day was 60.91. So it doesn't even test 60, doesn't even test the 8-day EMA. And when it was pulling back on lower volume. And then we closed the day right at the high, where if you look at the S&P 500 or if you look at the NASDAQ, both of those indexes closed right at the low. So it's showing intraday relative strength along with buying support coming in well before $60. Ideally, we see more market pressure for this setup. More market pressure come in Monday, Tuesday. We pull back into 60 and then can manage our risk against 60 and the 8-day EMA for ON. And the last stock that we'll cover on this kind of other list before we get to oil and gas and HVC setups is ZIM. Shipping stocks have been extremely strong. If I go really quick to GNK, that's a setup that's been holding well, breaking into new highs. GOGL, also a setup. This isn't showing the dividend, but this is forming a pivot right around $16. So back to ZIM. That group, transportation shipping, 10th strongest out of 197, A+ group strength rating. It's got a 97 overall composite rating with a 98 individual relative strength rating, extremely strong fundamentals, fund ownership rapidly increasing. Within the group, it's number 3 on relative strength, number 14 overall composite basis. That just shows you how strong that group actually is. This was one that was on the watch list last week. I actually had shares in this, but got stopped out on Tuesday after we broke under Friday's low. And right after that happened, and it did so on heavier than average volume, kind of at the end of the month. We usually see the high volume there. So volume's a little bit skewed with that move, but we see a little bit of a rally back up to that same pivot. So we're looking for a break over last Friday's high, which would be 68.70 as a potential entry point for ZIM. Now we get into oil and gas names. So because this is a theme, I'm not going to be going through a bunch of the fundamentals, the group strength, fund ownership, any of that. Really looking at the technical side of this because it is a group that we're looking at. So OXY, this has been really the main stock in the group that's been holding up well. So if we can get our money in the main stock, that will bode well for us. Last week on Tuesday, we had a breakout attempt, put in, sold off, closed right at the low, and then we just chopped sideways on lighter than average volume, building right around $70. So looking for a break over Friday's high, 71.31, or if we come in for the next week, test that 21 EMA, which is rising up, kind of pulling back to the previous pivot, that would be constructive as well, around $66. But if we're going to manage our risk with this, with a break over Friday's high, then we got to use that 8-day EMA to keep a small amount of risk. Next, we have RRC. This was a stock that I tried to trade on Friday, never got going. Market pressure was just too high, but you could see it closed down only 0.4% on Friday. We had a really nice move from under the 50-day moving average, popping up on higher than average volume. What day was this? On the 25th of May. Continuation the next day, then inside candle. Same kind of setup as OXY, trying to break over those highs on Tuesday of last week. Closed pretty close to the low, and then we had a low volume consolidation above the 8-day EMA, looking for a break over $35 to enter this stock. The final oil and gas stock that we'll cover is SFL. You can see this really nice breakout from $10 up to $11 and really tight consolidation, going from $11.50 down to $11 the last 2 weeks here. So flagging out really nicely, looking for a break over $11.50 as a potential entry point, and then a stop under the last 2 days lows would be $11.20, so about 3% risk there for SFL. And finally, we get to the HVC setups, high volume closes. So these are stocks that may be potentially in a downtrend, but you see a massive volume coming in, typically on earnings or FDA news. So with CHWY, CHWY, we had earnings where we saw actually negative earnings per share, but sales increased by 14%. And we see a massive move on massive volume, up 24% that day on 653% the average volume. We have closing right near the high of the day, 92% closing range. So whenever we have that, along with a strong market, we want to see if there's going to be follow through along with a strong market the next day. We get a very weak market on Friday. NASDAQ was down to 2.5%, S&P 500 was down 1.6, whatever it was. But CHWY was down only 1.3. So in a stock that's more volatile than the indexes, only being down 1.3 is pretty constructive action there. So with these HVC setups, we're looking for a break over the closing price of that move. So the close there was 29.18. So potential entry point 29.18. And then with this, because there is so much overhead supply, I wouldn't be trying to hold for a brand new uptrend. I would be trying to sell into strength once we get to the 50-day moving average and take my profits there. Next, we have CRDO. This was a stock that I traded right when it IPO'd for a nice gain. And now after we flushed along with the general market, this had a nice move, not the heaviest volume ever, as you can see, 4.8 million shares here. But we had earnings last week. Earnings per share were up 200% year over year. Sales up 90%. After-tax profit margins up 7.5. Strong closing range back over the 50-day moving average on 218% volume buzz, up 26.2% with a closing range of 76%. You can see Friday's action, again with a weak market, NASDAQ down 2.5%. This was only down a quarter of a percent, a little bit more volume than average, which is fine. but we closed basically right at that HVC level. So similar to CHWY, we're looking for a break over the close from Thursday, which would be $12.94. Call it $13 as a potential entry point, and then you got to manage your risk. The low of the day on Thursday is a little bit wide of a stop, or Friday is a little bit wide of a stop for me, so I'll probably just go with a 3%, 2% stop there for CRDO. And finally, we have RPTX. This is a biotech stock. Had a very strong move on massive volume on Thursday, similar to the other two. This was a 3,906% volume buzz, up 44% with a closing range of 66%. On Friday, we were actually up another 3.6% with 230% volume buzz, closing right near the high, 88th percentile, while again the NASDAQ and the S&P 500 closed right at the low of the day. So a really strong move on increasing volume. With this, if we pull back into that HVC level on Friday or of Thursday, that would be 1267. That's an area to manage risk against. Or if we open lower than Friday's high and then take out Friday's high at 1329, that's a potential entry point as well. Again, because there is such overhead supply, I would be looking to sell at least a portion into $15 and then move my stop up to even as quickly as I can. Because if the market continues with its pressure and this is more of a short covering rally with all the HVC setups, I don't want to be risking too much on the downside for them. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please leave a like and subscribe to my channel. I make this video every Sunday morning and then do other trading related videos. One more time, a big thanks to MarketSmith for sponsoring the video. If you guys enjoyed the trading research platform that we were using to break down each of the setups, there's a link in the description below that you guys could try it out yourselves. And finally, if you want to hear more from me, give me a follow on Twitter. It's StockTrickNick there. And then on all the other social media platforms, Instagram, Facebook, TikTok, StockTwits, it's Stock Tricks with Nick. Have a great rest of your week, and I'll see you guys in the next video.